Thinking of buying a home in North Carolina? In 2025, prices may not skyrocket like before, but there are big shifts every buyer and seller should know. From slowing price growth to rising inventory and hidden risks, this year's market could reshape the way people buy, sell, and invest in the Tar Heel state. In this video, we're breaking down the latest housing market trends in North Carolina for 2025. We'll cover everything from price forecasts and the hottest cities to watch to affordability updates and the hidden risks buyers often overlook. So, whether you're planning to buy your first home, sell your property, or invest in North Carolina real estate, this guide will help you make smarter decisions in 2025. Trend number 1. Price growth slowing. North Carolina's housing market is cooling down compared to the explosive growth of the last few years. Instead of double-digit price hikes, experts predict home values will rise only about 2 to 3% in 2025. That's still positive growth, but much slower than before. This slowdown signals the beginning of a balanced market. Buyers won't face the same pressure of bidding wars, while sellers will need to price homes realistically. Cities like Charlotte and Raleigh are still growth leaders, but rural and suburban areas are stabilizing. For buyers, this means more breathing room. For sellers, it means careful strategy. Trend number 2. Inventory rising. The number of homes on the market is climbing, with listings up nearly 20% compared to last year. This is a huge shift. Buyers now have more choices and less competition. For years, low inventory has fueled intense bidding wars and rapid price hikes. But in 2025, with more properties available, buyers can shop around and negotiate. This trend benefits first-time buyers and investors looking for better deals. For sellers, it's a reminder that presentation, pricing, and patience matter more than ever. Trend number 3. Hot cities and migration patterns. Migration trends are shaping the market. Charlotte, Raleigh, and the Research Triangle remain magnets thanks to job growth, tech hubs, and universities. Coastal cities like Wilmington continue attracting retirees, while suburbs around big metros offer affordable alternatives. This steady inflow of new residents keeps demand alive even as growth slows. Investors should watch emerging suburbs, where property is still cheaper but demand is climbing. Trend number 4. Affordability still a strength. Compared to New York, California, or Florida, North Carolina remains affordable. Median home prices here are well below the national average. Families relocating from expensive states find they can buy larger homes with more land at a fraction of the cost. Lower property taxes and cost of living sweeten the deal. This affordability continues to attract out-of-state buyers, supporting long-term housing demand. Trend number 5. Mortgage rates and buying power. Mortgage rates remain the wild card. In 2025, rates are expected to hover around 6 to 6.5%, lower than the 2023-24 peaks, but still higher than pre-pandemic levels. While higher rates impact monthly payments, slower price growth balances affordability. Buyers can explore creative financing options like adjustable-rate mortgages or down payment assistance to secure better deals. Waiting may not help, since rates could rise again if inflation ticks up. Trend number 6. Rising costs and risks. Affordability has its limit. Home insurance premiums are climbing, especially in coastal zones vulnerable to hurricanes and flooding. Some rates may jump by 15% by 2026. Climate risks are real. Properties on the Outer Banks have already collapsed into the ocean due to erosion and storms. Inland cities are safer, but buyers must weigh lifestyle perks against long-term risks. Meanwhile, property taxes in fast-growing metros like Charlotte are slowly rising. For investors, location is everything. Safe, growing suburbs may protect returns, while risky coastal areas could backfire. What this means for buyers and sellers. For buyers, 2025 is finally a year of opportunity. With more inventory and less competition, you can negotiate and make informed choices. Patience pays off, and exploring suburbs could land better deals. For sellers, realistic pricing is critical. Overpricing leads to longer listings, while staging and flexibility help homes sell faster. For investors, the fundamentals remain strong. Population growth, affordability, and job hubs keep North Carolina attractive. But risks like insurance costs and climate must factor into long-term planning. The bottom line? 2025 marks a shift toward a balanced market where both sides have power. So, to wrap things up, the North Carolina housing market in 2025 is no longer the runaway seller's market we've seen in recent years. Instead, it's transforming into a stable, balanced environment where buyers, sellers, and investors all have unique opportunities if they play smart. If you're a buyer, 2025 could be your year to finally enter the market without overwhelming competition. For sellers, success comes from pricing correctly and being ready to negotiate. And for investors, North Carolina's long-term growth story remains strong as long as you choose wisely and prepare for risks. Now, I'd love to hear from you. Are you planning to buy, sell, or invest in North Carolina this year? And which city do you think has the best opportunities? Charlotte, Raleigh, or somewhere off the beaten path? Drop your thoughts in the comments below. And don't forget to like, share, and subscribe for more real estate trends, tips, and insights. Your support helps us bring you the latest updates to make smarter housing decisions.